moving up, a couple of months ago rather, and now the rate sensitives are sort of ruling the roost. The Bank Nifty is up to 65 points, and so is the case with a couple of others. Let's get you an exclusive conversation with the management of IGL. Now, Q4 was an operational miss for the company, but the volumes were up. And while EBITDA per SCM also came in line with estimates, they have given a guidance of FY24 EBITDA per SCM between 7.5 to 8 rupees. But let's find out what the overall trend is. Sanjay Kumar, the managing director at IGL, joins us now to talk about that. Mr. Kumar, good morning and thanks a lot for being with us on CNBC TV 18. Wanted to start off by asking you how the demand has been so far in May and June, and how have the conversions been? The price cuts that you had undertaken after the gas price cuts, do you think that that has helped in any way in terms of boosting volumes or conversions?
Yeah, so good morning. Today is World Environment Day, and no better day than talk about gas, because in 1971, when this World Environment Day started, it's only now that we are learning the virtues of natural gas over the liquid fuels or coal. So coming to your question, when we reduce the price, our CNG and PNG volumes have picked up now. We are clocking more than 8.25 million cubic meter per day now. The prices have been reduced not only in the CNG and PNG, which we had done on in the first week of April, but also in industrial and commercial. And today we are having volume of about 1 million cubic meter per day in industrial and commercial.
Right.
Our all-time high was 1.2 million cubic meter per day, and we expect to touch that very soon. 1.2 million, this is about industrial and commercial. Out of the total sale, this is one portion which is related to market pricing of gas, not to the APM, non-APM pricing of gas.
Okay. Mr. Kumar, we'll come back to some of these numbers in just a bit. Good morning, Prashant here. I just want to sort of ask you to respond to something which the markets and investors seem to be a little concerned about, which is the fact that the Delhi government recently has basically put out, draft rules, the Delhi Motor Vehicle Aggregator and Delivery Service Provider Scheme. This is basically what they want to do in terms of EV adoption for vehicle fleets operated by aggregators and delivery service providers. So it's a pretty detailed set of draft which pushes EV adoption. Could you tell us, if this were to go through in the current form, what would be the impact? I'm sure you would have looked at the draft rules.
See, we are aware that the EV adoption is going to come up, but the analysis by the experts in this field has indicated that the hybrid model, which is supported by CNG, that may be the best solution for mobility in coming, decade. EV would definitely come, but the infrastructure for charging, the feasibility of charging, the time taken in charging, all those issues will come up. Moreover, it will be limited to more affluent cities like Delhi and Bombay, etc. It is another matter that Delhi is our main market, and that is why we are trying to enter into EV field also. We are presently working on more than 50 charging stations and on some other initiatives also in EV. But you are right. If the rules are adopted like they are, it will impact the aggregators. They will decide to go towards EV more and more.
Could you tell us what percentage of the CNG volumes that you sell in Delhi come from, say, cab aggregators, Ola, Uber, etc.? How much comes from, DTC buses, Delhi Transport Corporation buses? I mean, the fleet. What is the percentage?
Out of the total gas that we sell, it's about 8 to 10% is taken by DTC, and about 12 to 15% is taken by Ola, Uber, etc., the taxi guys.
Okay, so about 25% of your volumes, overall volumes, comes from these two segments. So this is about 25% of volumes then, if these rules go through in Delhi, in a way will be at risk. Am I correct in saying that?
Yes, the first statement that I made that EVs are going to come, but we have new markets where we will compensate this volume loss if at all it comes in 4 or 5 years. The new markets are in hinterland, in the remote areas where EVs are, not so easily cannot be adopted so easily. That is our current analysis, actually.
All right, Mr. Kumar, I think you mentioned that the volumes are up to 8.25, but you were guiding, I think, for around 9 MMS CMD, right, for the year. Do you see
for this financial year? Yes, for this financial year, you see the impact of lower market price of LNG has not yet seeped into the market. It's only now that that impact is coming. So more and more industrial and commercial customers are likely to increase their gas intake, as well as there is a kind of set of customers who actually rely on LPG and fuel oil. So since the gas price is going down, they are also likely to come back to gas fold.
So you're maintaining that guidance of around 9, that you'll clock that for this year. And also on the EBITDA per unit, I think you were talking about 7.5 to 8. Do you hold on to that guidance? And Sonia, I earlier asked you about the conversions. Well, could you give us a number? What are the conversions at?
No, so, the EBITDA in June also continues to be, slightly more than 7.5 rupees. The guidance that we had given was up to 8 rupees, and we are going to meet that. The conversion is presently more than 14,000, which, last quarter it was between 13 to 14,000. Now it is more than 14,000. More and more, the waiting list of CNG vehicles is increasing. It will translate into actual purchases. The data on Vahan portal actually takes some time to reflect the changes. It takes about 1 month to reflect the changes. We are very sure conversion rates would also go back to our earlier highs of 17, 18,000 very soon, in a quarter or so.
Okay, 17, 18,000, got that. Can you tell us how much has the gas cost increased after the unified gas pipeline tariff hike? And I think as per the calculations of analysts, it should be an increase of 1 to 1.5 rupees per SCM. Is that an accurate calculation, and will you be passing it on to customers?
See, this tariff increase for each entity would be different figure. For us, it's about 1 rupees 15 paisa, something like that. We have already factored that in when we reduced the price on, I think 9th of April was the date. These things were accounted for at that point of time. And even then, our EBITDA has increased in recent months.
Got it. We'll leave it there. Thank you very much for joining us. We'll touch base with you. I think, those rules in Delhi, I think they are to be notified by the end of this month, by June, and of course implemented over a period of time. We'll see if these go through like this. But material, 25% of overall volumes for IGL, perhaps at some risk over the next few years because of these rules in Delhi. And of course, the bigger thing is going to be if other large markets start to adopt some of these rules as well. We'll take a quick break here. We'll have the